Greetings, everybody. This is Jeff Scott, and I am broadcasting this from uh, surprisingly lovely Marseille, France. I had heard such negative things about it, but we decided to come spend a couple days here as we're visiting in Provence. Not alone in my hotel room, and I promised my wife I would do this quickly, so I thought I'd go through and talk a little bit about what I'm seeing here in this market and give you a full rundown when I return. I called it breaking out for new highs or just another bull trap. And it's 5:30 or so. Um, you have to do all kinds of funny things to watch football when you're XUS. So I had to spoof my iPad so it thinks I'm in America, so I'm able to watch the red zone. This is sessions for education purposes only. Anything I recommend, in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I pay for my tools, and trading involves risk, and you alone are solely responsible for those decisions you make. Um, I like to teach folks how to trade. I don't get paid for these webinars, and I call my trading be your own guru. I've had a number of influences, many of which are here in the essence of time. I'm not going to spend any time talking about them, but I took a bunch of smart people and I came up to get with what works for me, and that's what I use for my trading. If I was stuck on a desert isle, I'd need TradeStation and Thinkorswim with my various indicator sets, HGSI from analytics, as well as EdgeRater, and then a number of other toys are added benefit. Here's a website for highgrowthstock.com. They have a free 30-day trial. Under investing strategies, you'll see hundreds of my videos. Stock patterns are cyclical. You might as well just draw a line here. Every time it looks like we're going to fall, we get another leg up. Well, we got that leg up starting on Thursday. The question is this a new move up and are we going to go to new highs? Or as soon as we get loaded up and in the market, are we going to realize that it's a bull trap and we're going to fall right back down? I think time will tell, and we'll talk about what my thoughts are as we go by. I have started to get a little bit more aggressive, bought more stocks and calls, and gave up most of my protection. I still have some puts on my Amazon until I'm totally convinced. If you look at the Friday sector report, it's a broad-based rally. If you have to find weakness, well, utilities as well as gold and silver, which had been leading, were weak as the rest of the markets turned around. And healthcare as a sector is actually lagging right now. If we want to go look at the major markets and Thinkorswim, let's just take a quick look at them. Maximize. So you can see Thursday we broke above the 50-day moving average. This is the E-minis. Friday we traded up, not much on the way of volume. This also corresponded with really the end of summer vacation for most of us who have, well, of you who have kids. And perhaps that was part of why we saw a market turnaround as more participants came back in. The NASDAQ futures very similar, didn't do much at all on Friday. Here is the Dow futures. And even then broke above their 50-day moving average. Now, what's lagging? This is the Russell futures, and you have to wonder whether or not, without some more participation, if we should expect a whole lot from this market. It'd be nice to see the Russell participate. As you can see, the Russell closed below the 200 and the 50-day moving averages. The VIX, as the markets got strong, has come down. There's certainly nothing there that shows any energy and likely that it's going to move up, although it's when we don't think it's going up that it usually does. And then if we take a look at the dollar here, the dollar has come down. Now, interestingly, even with a weak dollar, it didn't support the metals, which I think is because the metals were up very much because of market concerns as much as anything else. All right, let's go down here and go back into my PowerPoint. If I look at the weekly charts, you can see nice uptrends, but a pretty rough pullback in the beginning of this year and a couple of small ones. This is just another small pullback on the way to new highs. Time will tell. Notice weekly buys on the E-minis and the Dow futures, not yet on the NASDAQ, not yet on the Russell. Seeing a sell come in on the VIX weekly is good, and we'll see if the dollar can make a move out of this chop area. Let's look at the things going on underneath. Well, it's interesting to me that at least on the long bond, 30-year, we're at all-time lows, but kind of bounced at the area that we bounced in 2009, and that corresponded with an improvement in the market. And if we look here, you can see, let me check that. This was the stock market, not the interest rates. We bounced on the week from an area much below where we bounced in 2009. We'll see if that does anything. Also a small bounce on the 10-year treasuries. If one looks at the inversion, this blue line, which I apologize, I know is somewhat hard to see, is indicative of the 2 to 10 treasury yield curve, and you can see it's right at the point of inversion. The AD lines in white, the markets in yellow, both for the Russell 2000 and the 1000 turned up this week. And if I look at the NYSE, we're at all-time highs. And as I look at this, the only thing that's turned down is the TLT, not a surprise. And you can see all the other ETFs have turned up, which represent the major market indices. Breadth improved, but as you can see, even on the T2121, we are not at areas of extreme. The daily McClellan, notice how the summation oscillator on both the daily and the weekly have broken above the falling trend line. That's probably a positive somewhere in there. The bucket, 76% of the stocks in the S&P 1500 are below their midline, and you can see we now have over 14% of the stocks are above their Bollinger Bands. This is something that can go quite a bit further before I think the market has to pull back because of stretchiness. Doesn't mean the market goes higher. We haven't had a Hindenburg now in a couple of weeks, but you can see, like Old Yeller, they called the pullback in June. They called the pullback in August on the NYSE. Market tone. Now, I have a big question mark here because when I run the new Edge Rater software on the Edge data, I don't get the same picture. And maybe I have to talk to Chris about whether we're using the right symbols. But if I go back to my old way of using with HGSI data, you could see we had kahunas on Thursday and some on Wednesday showing a market move to upside. And ultimately, all the major markets, this is the Woody indicator, went green on Thursday and Friday. That has to be bullish. And the sector strength looks good except for healthcare. Now, what's not working? The canaries in the coal mine, they're choppy. They're sitting right below their 50 and 200-day moving averages. They did have pocket pivots and a kahunas and a mobile breakout from a squeeze, but they are even below their chandelier. So I put choppy at resistance and clearly not leading. The index that I put together in March, interestingly, has still not broken down. And if we look at it here, we could see it's holding at major support. This week is not a busy week of news. I think the Fed is in a quiet period because of a meeting next week with anticipation of an additional rate cut, not this week, but the following week. If we look at the red dots, which are the key things, really not a whole lot. We've got a PPI on Wednesday, energy report on Wednesday, CPI on Thursday, claims on Friday, and retail sales on Friday. Notice no Fed heads are speaking. And then if we look at earnings, this is a relatively quiet week. I do like to play Restoration Hardware. I've made some money on that trading in the past. So I'll take a look at that at some point this weekend. As I put down here, it is a judgment call to hold stocks over earnings dates, and it's bad judgment to not know when your stock's earnings date is scheduled. So what are my thoughts? Markets break out of congestion late in the week as trade war tensions ease. Risk on assets such as gold. Excuse me, let me change that. Risk off assets such as gold, silver, bonds eased. The rally is otherwise broad-based, as I showed you, with only the XLV lagging. As earnings season winds down, the Fed enters a quiet period. The markets do appear positioned to rally. However, as seen before, any assumptions are only valid until the next presidential tweet. And I put more money to work, but I am not all in at this point. So let's very quickly take a look at the markets in HGSI, and then I'm going to let my wife sleep without having to listen to me doing another one of these videos. So let's open up Designer. Let's go down to Market Analysis Groups, Major Markets Plus. At the warehouse, they'll pop over here on the right. And then let's just look at top-down view. And what do we see? We see that the Dow Jones, the NYSE, the mid-caps, the NASDAQ, and the semis are all at the top. You know you had a good week in HGSI land if that's the case. Interestingly, biotech is lagging at gold and silver, as I said, even though the dollar came down, they're certainly lagging considerably. Let's just take a look at what we got here. Open these up, it'll take me a second. All right. So S&P 500, well, what do I see? Well, as we talked about, they're above their moving averages. And I've been looking at this box for some time, and we had failed to break out of this box before. We broke out, we came back, we tested, we broke through. We've broken out above the box again. Obviously, that's a bullish move. We got to stay above the box for me to stay excited. If I look at what the Dow Jones Industrial is showing me, I have a picture that is frankly very similar, as the box we had drawn was back here and somewhere along here. And we haven't broken out, but we have broken above the 50-day moving average. So I'd love to see a move up here, and that's what I'll be looking for. The NASDAQ composite also has broken above its moving averages. And unfortunately, for the NASDAQ composite, unlike the NASDAQ futures, the NASDAQ composite was a little soft on Friday. Just take a look at that. Yeah, it was down 13.76. If we look at the Russell 2000, that's where weakness has been. And you could see, as I showed you on Thinkorswim, that the Russell just remains weak. If I go look at the dollar has come down, bounced a little bit here. This is different than the futures. Perhaps it may support some of the issues with the gold and silver. And as I mentioned before, the VIX has come down, not quite to the levels that it was at when resting here, but it's come down a lot from where it's been. And then lastly, let's look at gold and silver, which were losers on the week. And you can see gold has broken down here now. It's still above its chandelier here, so it's still technically you could be long it. I've taken off over half of my positions, and I'll be quick to drop them. I still don't trust this market fully, and I still think there's going to be tweets, and Gold has been a great thing to be in. This has been a very powerful move off of here. Silver has also had a big move, and silver has given it up as well. It has broken through its chandelier stop. So we shall see what happens with silver. All right, next thing I like to do is quickly get an idea of what's working in this market. So I go to 07, I look at the industry groups, and I've got 66 up, and I have only 14 down. Now, the good news is I see a lot of bullish things to like here. I see the indexes breaking out. I see the preponderance of groups are up, especially on the 2-day window. If I look at the 5-day window, even better. 72 groups up and only 14 down. So this market does seem to have turned, and therefore we should be looking at the long side. So I did my weekly review, and I just thought, because I'm on vacation, with the top 10 groups, right-click peer, and let's just take a look at some of these stocks. I did like NVIDIA. I've been soft on it for a while, but I really think it's perhaps, I would say it's turned, but it's starting to look more interesting to me. Why? Because it's broken above its moving averages. Sort of like they could act like a trampoline. You've got the 8-day exponential above the 50. The 17 is in there as well. And you've got the 200 here. You've got had a kahuna. You got a pocket pivot. And you've had, the only downside was a red candle high. Your weekly bongo is green. And you could see it looks great on the weekly, and the got a cross of the red above the magic line, which is also bullish. So NVIDIA looked good to me, and I think a big driver of that was perhaps earnings growth is going to recur. That's not what I want to do. Going down, Intel chart pattern looks fine. I don't love its fundamentals. It's an old name, but it too has had a cross above the magic line. Micron has already been leading. It's not all-time highs, but it's broke out of a recent highs. It's a cup and handle, but a couple of kahunas. It's already run. I'd rather find things that are getting ready to move. Qualcomm looks a lot like Intel and NVIDIA, breaking above the moving averages. And then Universal Display, another one. Don't like how it finished on Friday with a bit of a shooting star, but this is going to be one to watch as well. Multiple kahunas, pocket pivots, coming out of a squeeze, good earnings per share growth, but it does have a high multiple. So clearly in that group, we saw a couple things to be interested by. Generic pharma. Planet's been kind of a funny animal. It's had issues with the FDA. It was supposed to be bought, then the bot purchase was off. So I'm going to leave this one alone, although it really looks like it's moving. Allergan, nah. Perigo looked interesting to me. You can see breaking above its moving average here, breaking above the magic line, a weekly buy signal in a daily buy signal, two kahunas, pocket pivots coming out of a squeeze. And you can see the group strength is rocketing up, but a lot of that is probably landed. Mylan is a stock that has been all over the place. It had some very bad earnings calls, to be honest. Let's see if I can get the, and too far down the pattern, it interests me. That's the index. I usually don't go below it. On specialty apparel, there are a couple things I like here. Lululemon had great earnings on Friday, as shocker, men are starting to buy more and more of their stuff. I laugh because when I'm on the plane, I like wearing their stuff as well. I closed doji on the daily and the weekly. New buy signal, bunch of kahunas. I think this looks great and potentially goes higher. My challenge is it ran a lot last week. Do I see if it pulls back some? You may not get that pullback. Zumi is an old name. What a big move on Friday. It must have been earnings. Huge volume. Interesting looking pattern. Not a name that I follow, but look at the growth, the earnings per share growth. Probably worth doing some research and put that on my buy list. Most other ones we are. TJ Maxx didn't finish well, but looks like it wants to go higher. All right. So I go through the top 10. In the essence of time today, I'm really not going to do that. Just wanted to touch base because I know I didn't do anything last week to make sure people realize that I'm still here. I've just been on vacation. A couple of hot names. I own some ACB, but they all have the same pattern, big pullbacks. Someday I think pot's going to be a great thing to buy. It's pulled back here to areas that it's bounced before, but it's a stock that's a falling knife. It's bouncing here. It's interesting. If that's your kind of thing, ACB looks the same. Tilray looks the same. Kronos looks the same. This is a specialty pharma GBT, had some good news and sold back off. Amarin also had some good news, but is really going nowhere right now, waiting for an FDA decision come December. So I put this all together and I say it's probably worth fishing around or thinking about fishing with some of the marijuana stocks. I wouldn't be heavy in my portfolio with them. And then stocks that like to go up in a nice tight pattern that got loose but looks like it's breaking out. You got Visa here looking strong. Again, the earnings per share growth is not great, and that might be the fly in the ointment. MasterCard, similar. Global Payments, similar. Fiserv, they all look the same. Total Software. This is a group that's all moving together. Discover being one that's a laggard. I don't know if I would want to buy the laggard. So I went through the top 10 groups. I put together a buy watch list. And I haven't really done my complete review because, hey, I'm on vacation. But these were some of the ones we've already talked about them already. I guess the one I didn't show you was a couple of these healthcare stocks down here. Apellis Pharma. I have no idea about the fundamentals of what they do. I see that they have no revenue. They lose money. So that tells me they're a developmental stage company in healthcare. Their volume is okay. It's not great. Does not pay a dividend. It did have a weekly high close doji, but more important to me, what I saw was it went sideways, and then you had a couple of kahunas come in. You've got some pocket pivots, mobile breakup from a squeeze, and in my world, that usually means the stock's going higher. And then Catalyst Pharma is one that looks like it wants to go higher as well. So that was just a quick update of what I see in the market. We'll get back to a full schedule this coming weekend, and I'll look to put a live program on. So trade safe. Be careful. This market still can go the other way. Right now, it feels like it's going higher, and the futures are not out yet. Thank you, and have a great week. Live from Marseilles, France. Signing off.